All right, so today we're taking a deep dive into Trent Ltd's 2023-24 annual report. And we're really going beyond just the numbers. We're going to try to get a feel for the company, what their strategies are, how they're positioned in the Indian retail market. And it's like getting a sneak peek behind the curtain of some of their best-known brands.
Right.
Westside, Zudio, and really understanding how those brands fit into the bigger picture of India's retail scene.
Yeah, you're right. Trent is a really significant player in a sector that is just growing incredibly fast. By 2030, the Indian retail market is projected to be worth like $4.5 trillion. It's massive. And a lot of factors are driving this growth: urbanization, rising incomes, this big shift towards organized retail. But what's interesting is that even with all this growth in modern retail, traditional trade, like the smaller shops, they still hold a big part of the market.
That's a really interesting point.
Right.
It kind of shows us that it's not just a simple battle between the big modern retailers and the traditional shops. It's way more complicated than that. These modern retailers, they need to figure out how to not just compete, but actually coexist with those smaller players.
Yeah, exactly. And I think Trent's approach with all their different brands kind of shows that they get this complexity.
It's like Westside.
Yeah, Westside, Zudio, Utsa, even their move into luxury with Samo, they're trying to reach different types of customers with brands that kind of match their needs and aspirations.
It's like they're not trying to be everything to everyone. They're strategically targeting specific parts of the market.
Exactly.
That's smart. And what about Starquick? Their move into online groceries, that seems like a whole other thing.
It is. It's a really interesting move because the Indian grocery market is still very unorganized, lots of potential there. And what Trent is doing with Starquick is they're using their existing stores, like their physical stores, to create this omni-channel approach, basically blending online and offline shopping.
So it's not just about selling groceries online. It's about creating this experience for the customer, whether they're shopping on their phone or walking into a store.
Exactly.
So when we look at Trent's business model and their performance, what really stands out to you?
Well, their main thing is to offer like this really appealing mix: trendy fashion, creating a brand experience that people aspire to, and making it easy to shop, both through stores and online. And when you look at how they're doing, you can see this model is actually working. They're really focusing on things like sales per square foot, so how much money they make from each bit of retail space.
Makes sense. It's all about efficiency.
Exactly. And of course, operating margins are important. That tells you how much profit they're making from their operations after all the costs like rent, salaries, and inventory. And they're also watching shrinkage rates, which is the loss of inventory from things like theft or damage.
Because that can really eat into profits.
Absolutely.
So they're watching the bottom line, but they're also seeing some pretty impressive growth, right? Like their number of stores has been increasing a lot.
Oh, yeah, for sure. And their return on capital employed has also gone up significantly, which means they're using their capital effectively to generate profit. So it's not just growth, it's smart growth.
Okay, let's dive into the financials. Their total income jumped up in FY24. But did their costs go up too?
Yeah, their cost of goods sold has gone up, which is normal when you're selling more. But what's good is that their gross margin has stayed pretty stable, so they're managing their costs well, and they're keeping their pricing power.
That's encouraging. But what about this reassessment of their lease liabilities under IND AS 116? It sounds a bit technical.
It is. It's a change in accounting standards.
Yeah.
Basically how companies report their leases. For Trent, it actually lowered their reported lease liability, which makes their debt-to-equity ratio look better, which is a key indicator of financial health.
So it's more of an accounting thing, not a big change in their actual finances.
Exactly.
But investors need to be aware of it. Okay, so we've seen that Trent is financially sound. They're growing fast, delivering good returns. But they're also really emphasizing their commitment to sustainability and social responsibility, even aligning their strategies with the UN Sustainable Development Goals.
Right. And this isn't just PR. Investors and consumers are demanding these things now: ethical and sustainable practices. And Trent is responding to that.
What kind of initiatives are they actually doing?
Well, they've got responsible sourcing policies, making sure their products are made ethically and sustainably. They're focusing on waste management, reducing their environmental impact.
It's great to see a big company like Trent taking these issues seriously.
It is.
Are there any specific examples that stand out to you?
Their support for Project Nanhi Kali. It's an initiative that helps girls from disadvantaged backgrounds stay in school. It really shows their commitment to social impact.
That's definitely commendable. Now let's talk about the people behind Trent's success. Who are the key players?
Well, you've got industry veterans at the top, Noel and Tata as chairman. and P. Venkatesolu as executive director and CEO. They both have tons of experience.
And the Tata name obviously carries a lot of weight in India.
Oh, yeah. It stands for Trust and Ethical Business.
So that's a big plus for Trent.
Definitely. And under their leadership, Trent has set up a really strong governance framework. The board's composition, their committees, their performance evaluation processes, it all shows a commitment to transparency and accountability.
And those are crucial for a company as big as Trent.
Absolutely.
What about risk management? The report mentioned they have a pretty comprehensive policy.
Yes, they've identified potential risks in areas like data security, talent acquisition, even changing consumer preferences. So they're being proactive, thinking about potential threats and figuring out how to deal with them.
Good to see. So they seem to be covering all the bases.
Yeah.
But even with a great team and a solid plan, there are always things that can come up that you don't expect.
Oh, for sure. No business operates in a vacuum. Things like competition, changes in how consumers behave, even big economic shifts, all of that can affect performance.
Which brings us to the big question. What's next for Trent? How are they positioned to deal with these potential challenges and take advantage of new opportunities?
That's what we'll look at next. We'll dig deeper into their growth strategies, their investment plans, and how they're getting ready for the future of retail in India. So let's talk about the future of Trent. The annual report actually gives us some interesting insights into their plans.
Okay, so what's the grand plan? Where are they putting their money?
Well, a big chunk of their investment is going towards expanding their store network, which makes sense if they want to hit their ambitious growth targets. They want to reach more customers all over India. But it's not just about physical stores.
Right. They're also investing a lot in their digital stuff.
Right.
And that whole omni-channel thing we were talking about earlier, they're serious about meeting customers wherever they are, online or in a store.
Yeah, exactly. And something that really stands out to me is their focus on building their own brands. It's not just retail anymore. They're becoming brand builders, controlling the design, the quality, the pricing, which gives them more control over their margins and helps them build a strong brand identity.
That's smart. It's a way to stand out in a crowded market. But what about their joint ventures, especially with international partners like Zara and Massimo Dutti with Inditex, or the Star Bazaar hypermarkets with Tesco? Those seem pretty important to their strategy.
Oh, yeah, definitely. Those are strategic alliances that give them access to global expertise and help them expand their reach. But the report also talks about some uncertainties and risks with these partnerships.
Okay, I'm listening. What kind of risks?
We'll take the Inditex partnership, for example. It gives Trent access to those big global brands, but they're basically a financial investor in that deal. They don't have a lot of control over things like the products or the sourcing or even how the brands are used. Those decisions are made by Inditex.
So it's kind of a trade-off. They share the risks and rewards, but they don't have full control.
Exactly. And the report even suggests that these joint ventures might not be long-term strategic investments for Trent. It really depends on how the partnerships develop and if they can manage all the uncertainties.
Makes sense. It's a fluid situation. Okay, so let's shift gears a bit. Let's talk about Trent's valuation. They're doing well financially. They're growing, making smart investments. You'd expect them to be valued pretty highly in the market, right?
Oh, absolutely.
Yeah.
The market definitely sees their potential. But valuation is complex. There are always things that can affect it, like competition, for example. The Indian retail market is getting more and more competitive. Lots of players, both domestic and international, that can put pressure on margins and impact valuations.
Right. And consumer tastes are always changing.
Yeah.
What's popular today might be out of fashion tomorrow.
For sure.
Trent needs to stay ahead of the curve.
Absolutely. And the report actually highlights that as a key risk.
Yeah.
They've got systems in place to keep track of consumer preferences and adjust their strategies.
So they're not just sitting back and relaxing. They're actively watching the market and evolving.
Exactly.
Okay, so every successful company needs a strong team at the top. Let's talk about the people behind Trent's success, the promoters and management.
Well, Trent is part of the Tata Group, one of India's most respected business groups. The Tata name means a lot, both in India and globally. It stands for Trust, Quality, Ethical Business.
That's got to be a good thing for Trent.
Oh, yeah, definitely. And under their leadership, Trent has really embraced good governance, diverse board with independent directors, strong committees, clear performance evaluations. They're accountable to their shareholders and to themselves.
That level of transparency is impressive.
It is.
But even with the best team and the best plan, there are always risks in business.
Of course. No business is immune to risk. But the key is to identify those risks and have plans in place to deal with them. Trent's report does a good job of outlining the potential challenges.
So what are the top 3 risks that stand out to you?
Well, competition is always a factor. As we discussed earlier, they need to keep innovating and find ways to stand out from the crowd.
Okay, that's a given in any industry. What else?
Evolving consumer preferences. They need to be flexible, adapt to new trends, make sure what they offer is relevant and appealing.
Makes sense. And the third risk?
Data security and cyber threats. With more and more reliance on digital platforms, they're exposed to data breaches and cyber attacks, and they acknowledge that as a serious concern.
Good that they're aware of it. Hopefully they're taking steps to protect themselves. But risks are only one side of the coin. There's also the potential for growth and expansion. Their annual report shows a company that's poised for success. They seem to have the right team, the right strategy, and the financial resources to achieve their goals.
Yeah, you're right. And speaking of ambition, one thing that caught my eye was their shareholding pattern. The Tata Group owns a majority stake, of course, but there are other institutional investors too. And a significant portion is held by the public.
Interesting. What does that tell?
Well, this diverse shareholding structure is a good sign. It means Trent is attractive to a wide range of investors, which says a lot about their credibility and their potential. It's not just a Tata company. It's a company for everyone.
That makes sense. But with all these different stakeholders, things can get a little complicated, right? I'm thinking about related party transactions.
Ah, yes, related party transactions.
Yeah.
Imagine you're playing a board game with your family, and you're trading properties or lending each other money. Those are related party transactions, because you're dealing with people you're close to.
Okay, I get the analogy. So for Trent, they have transactions with other Tata Group companies, or their joint venture partners.
Exactly. And those transactions need to be looked at carefully to make sure they're fair and transparent. And the report actually gives a detailed breakdown of these transactions, the value, who's involved.
So they're being upfront about it,
Yeah.
which is good for investors. But it also raises the question of whether these transactions are truly at arm's length, or if there's any potential for conflict of interest.
That's a valid point, and it's something that investors and regulators will always be watching. Now, we've covered a lot today. We've talked about Trent's financial performance, their growth strategies, their leadership and governance, the risks they face, their shareholding structure. But there's one more piece of the puzzle we need to explore.
Okay, so we've talked about the numbers, the strategies, the people. But what about the big picture? What does the future hold for Trent?
Well, we can't predict the future for sure, but the annual report gives us some hints about what they're focusing on and what challenges they might face.
Okay, so what's on the horizon for Trent?
One thing that's really clear is that the lines between online and offline retail are blurring. Trent gets this. And they're putting a lot of resources into creating this seamless omni-channel experience.
Right, so it doesn't matter if you're shopping on your phone,
Right.
on your laptop, or in a store. It all feels connected.
Exactly. And they're also using data and technology to make the shopping experience more personalized. Think recommendations, special offers, even using what they know about their customers to decide what products to offer.
That's interesting. It's not just about selling stuff. It's about building relationships with customers,
Yeah, that's a good way to put it.
creating a community around their brands.
Right. And it's not just about the customer-facing stuff either. They're using technology to improve their supply chain, logistics, all those behind-the-scenes systems.
So they're making everything more efficient.
Exactly. Efficiency and agility are key these days.
Absolutely. And of course, we can't forget about sustainability. We talked about it earlier. It seems like it's not just a trend for them. It's really part of how they do business.
Yeah, they're really committed to those UN Sustainable Development Goals. Responsible sourcing, waste management, ethical labor practices. It's not just about looking good, it's a core part of their business.
And that's becoming more and more important. Consumers care about these things.
They do. And they're willing to pay more for brands that share their values.
So it's good for business and good for the planet.
Right. A win-win.
But even with all the good stuff, there are always challenges.
Of course.
What are the biggest ones for Trent?
Well, as we said before, competition is always there. The Indian retail market is attracting players from all over the world. Trent needs to stay ahead of the game.
It's like a constant race.
Yeah. They're managing their growth. They need to make sure they don't lose focus as they get bigger, maintain quality, keep their brand strong.
Controlled growth is important.
Absolutely.
What about external factors?
Well, things like inflation, changes in currency values, government policies, all of that can impact their performance.
So they need to be flexible.
Exactly. Able to adapt to changes.
And that's where their strong leadership and governance come in.
Right. They have a team that's experienced, forward-thinking, and committed to doing the right thing.
That's good to hear. Well, this has
Huh.
been a really fascinating deep dive. We've covered a lot. Financials, growth strategies, risks. But like any deep dive, we've only just scratched the surface.
Right. I encourage our listeners to check out Trent's annual report themselves. It's full of great information, really gives you a look inside this company.
It's like a glimpse into the future of retail in India. Maybe some of our listeners will even become part of Trent's journey, as investors or as customers.
That would be great.
So to sum up, Trent is a company that's not just focused on profits. They care about sustainability. They care about social responsibility. They're a great example of how to build a successful business and do it ethically.
Well said.
We hope you enjoyed this deep dive. Until next time, keep exploring, stay curious, and dive deep.